Welcome in, everyone. Thanks so much for joining us today. I'm Zach Thomas with Growth Horizons Wealth Management, and today we're going to be talking a little bit about how to navigate business loans. Whether you're thinking about scaling up your organization, or maybe you've hit some rocky points in your business, we're super excited to have Alan Alanis, who is going to be helping us navigate the landscape for how to think about utilizing lending inside of your organization. Next month, you definitely want to make sure that you join us. We'll be having, I guess, kind of the inverse of this conversation, which is thinking about taking on private investment, whether that be venture capital or private equity. Alan originally hails from Lubbock, Texas. He comes from a family of entrepreneurs. Alan has been in banking for, I think, 25 years now and currently works with Frost Bank as a commercial lender. I've had the opportunity to get to know Alan pretty well over the past year. We're currently working with a number of organizations mutually and couldn't be more excited to have Alan be a part of our conversation today. Welcome in, Alan.
Hey, good afternoon. Thank you for having me. I appreciate you.
Yeah, absolutely. Well, super excited to have this conversation today. I know for some people this is a very exciting topic. For other people, it's like, oh my gosh, I got to go have a conversation with a banker, and they're going to ask for everything from blood sample to the dog's DNA, and why in the world do we need all this information? So, super excited to to have you a part of the conversation today. As we were exchanging back and forth why we want to have this conversation in the first place, we both realized that there are a lot of small business owners that really have a challenge navigating the commercial lending landscape and not fully understanding what it means whenever they're thinking about, getting approved for any type of financing. So we really think this conversation matters, because we want to help hopefully these small business owners be more successful. And as they think about getting ramped up and taking on that loan, what are some of the steps that they can take beforehand? What are some of the thoughts? What's the framework that they can build as they approach the actual lending conversation? So super excited to be having this conversation with you today.
Yeah, it's great to be here, and I certainly appreciate the invitation. So it's a pleasure.
Awesome. Why don't we jump in and talk a little bit about some of the pitfalls, maybe some experiences that the two of us have had, in terms of maybe misconceptions around commercial lending or getting some type of, business loan. I know that one of the things that you and I have both experienced mutually, because we've had these conversations off camera, and I started off my career at Wells Fargo. I was there for about 3 years and saw a lot of small business owners, deal with this, which is not really understanding the value and the benefit of having good financials whenever it comes time to have the conversation with the lender. So would love for you to, just share a little bit, maybe some examples. How have you seen business owners have maybe some misconceptions or not fully understand how their financials fit into a lending conversation?
Sure. Yeah, absolutely. So appreciate you. So again, one of the key mistakes I think that a lot of folks made, especially when they're first getting started, is not knowing what to bring to the table. So many times we have clients that will show up and say, well, what do I need to bring? And there's a lot of mixed, confusion, I guess you could say, with understanding of what's important and what's needed. And so if it's a startup, it's kind of hard if you don't have some kind of a business plan. So you got to have a base, a good foundation of understanding where you're getting started from. And for some of those folks that maybe have been in business for a year or two, it's always really good to have some good financials in place. And I'm not just talking about your personal financials, which are very, very important, right? It's important that you do your personal tax returns every year. But as you start to transition and that business starts to kick up, really having a good balance sheet and some income statements that really sort of tell the story of, yes, they're not going to be what's the word I'm looking for, glamorous right up front, right? Because you're just getting started and the numbers may be relatively small, or perhaps you'll see a negative or something in red. And it's not anything to be panic stricken about, but it is certainly something that a bank wants to be able to see. We want to be able to see that there's a trend. And so while we understand that most businesses don't make money straight out of the gate, right? It's important to have those documents in place and understand where those trends are going, and then have some eye line on where that's going to carry you going forward. I think those some of the main mistakes that folks make is they don't take the time to actually put real good numbers into place, and have somebody that's an expert and can give them some guidance, and understand, hey, these are important tools, these are important things that you should have, these are important statements that should have in line, so that you can tell a really good story to, say, a bank or an underwriter, when it's the appropriate time for you to pursue a loan.
Sure. Yeah, and I know this falls outside of your scope a little bit in terms of how involved you are in the process, but one of the first things that I try to bring up anytime we're having a conversation with a small business owner is, what's your relationship with your accounting firm or your bookkeeper? Because like if you're talking to them once a year, your financials are probably not in the place that they need to be. That's an exercise that we try to encourage, especially a lot of the clients that we work with. Like we'll actually jump on a call with their bookkeeper once a month or once a quarter, or their accounting firm, and just say, hey, let's make sure that you actually have a firm grasp of what's going on from an accounting standpoint. Because when we get ready to go have that conversation with Mr. Banker or with Mr. Investor, it's going to be one of the first things that they're asked, they're
Yeah.
going to ask for. It's like, hey, send me over 3 years worth of tax returns, send me over 3 years worth of financial statements. And if you, I've been in the room where the business owner gets kind of like the deer in headlights, look like, I don't even know what it is that he's asking me for. That it's not exactly a reassuring, for, I would imagine, on the lending side, if
Right.
somebody is immediately going, oh my gosh, like I don't think that my books have been cleaned up, and we've already had the lending conversation now.
Sure. Yeah, yeah. I think you're spot on. To have a good conversation with your CPA or somebody that can help guide you and help provide you some of that financial statements is important. But I think you nailed it when you said, for you as an owner to understand what those numbers mean, is you're just really taking it to another level. And then when you come in, say, to your bank or to us here at Frost, and we have that conversation, you can guide us through your financials and what they mean. That sends a really, really great message, right? Because it helps us understand and know that you're confident in how you're describing your business from a number standpoint. But I think more importantly, you can forecast a little bit better on what you project and how those projections make sense. And at the end of the day, while a bank can take projections with a grain of salt, they mean a great deal if the client or the owner understands where those numbers came from, and more importantly, what they can do with that going forward. So
Sure.
yeah, spot on.
Yeah, I know that another common scenario that we've both seen and have had some conversations with is maybe somebody who's a little bit too aggressive with debt, and they're trying to take on too much too fast. And so, have there been some examples that you can think of, maybe over the past year or two, where you've seen an organization who maybe the bank or you personally didn't think was ready to be able to take on that amount of leverage, that it wouldn't be healthy for the long-term success of the business?
Yeah, so absolutely. I've seen some folks that, unfortunately, there is such a thing as growing too fast, right? We have seen that in the past where folks feel like, they're really ready to take that next step or the next big project or sign that new contract. And it can be all very exciting, and quite frankly, very daunting. But at the time, whenever they feel like it's time for them to take that big project or that big contract on, they can't quite get there from a normal traditional cash flow standpoint, from the cash flow that they're generating. So they come to a bank and say, hey, can you help us with this? Or can we get a line of credit, right? That's the first thing that usually comes out of their mouth. Can we just get a line of credit? And so many times I've found clients that, we really want to have that conversation and uncover what's going on there. We just don't immediately jump into a line of credit and that's a save all or a catch all, because there's so many other things that can come into play. So it's critically important to understand the right tool for the right purpose, right? And so we don't want to, in the best terms that I can put it, we don't want to give you a credit card or a line of credit to go buy a vehicle with, right? Or buy a bunch of equipment with. Although it might make sense because you can take some of those advantages of some of the terms that they might provide for you, or maybe they give you a huge discount because you're paying in cash. But be very aware of that. Right sizing the loan and having the right type of loan in place, is really a good conversation that you should have with your banker. And those are some of the things that I've seen that can create some tension. And if you plan on growing a little too fast, it can create some major hiccups.
Sure.
And I don't want to get too far down the rabbit hole here, but usually some clients will take a line of credit, and I go back to that because I've seen it one too many times. We'll take a line of credit, and the credit lines of credit for businesses typically are interest only, so
Mhm.
they're only paying interest
Sure.
on that principal, not realizing that, or they may realize it, maybe forget or whatnot. But at the end of the year, typically those lines of credit are only good for a year, and so you come up to month 11 and you think, oh my gosh, I've only been paying interest this whole time, and I've got a
Right.
big balloon payment. How am I going to take care of that?
Mhm.
And
Sure.
so now you're stuck.
Yep.
And so now we're going to have to term that out or do a term loan of some kind. The interest rate is not as sexy as it once was, right? Forgive the term. But you get the idea, and you get yourself in this kind of a bad situation in a corner, and trying to figure that out when you should have had that conversation in the very beginning,
Mhm.
and trying to make sure that you use the right tool
Sure.
for the right product.
Yeah, I'm thinking of somebody that I've worked with in the in the past, which is super ambitious and aggressive with growing the company. We had a conversation about kind of level setting their expectations and understanding what you're saying yes to when you grow at that kind of speed.
Yeah,
And I remember 6 months later, after we had that conversation, there was all of a sudden this inflection point where there were a couple of principals in the firm, and one of the principals in the firm felt like they were carrying more of the weight because there was now this cash infusion that had taken place 6 months ago. And it's like, we have got to get this thing done. Like there is no exit, right? There is no parachute. Like we have committed ourselves. And I
yeah,
just remember, like, I felt good because we had the conversation months before they decided to pull the trigger. And I said, like, are you guys really sure that you want to do this? Because, like, if this, right, if you take this loan or this capital infusion, it's going to be a couple of months down the road where you're
sure.
probably going to wake up and you're going to go, oh my gosh, like, what did we actually say yes to? And at that point
Yes.
in time, like, once you started on that big project or you're starting on that real estate development or you've hired those people, it's not an easy to decision to unwind those
Yeah.
things, right? And to kind of take a step back in time. And so it's good, all right. What's the saying? Fortune favors the bold, like, it's good
Yeah.
to risk on yourself and to put yourself out there. But I
Yeah.
try to educate, especially the clients that we're working with, um, that when we're building a relationship with a bank, don't treat the banker like a bad guy because they tell you that you're not ready. It's more, you want to look at them as a coach because they've seen a little bit of everything. Like, you've been in the industry for 25 years. I'm sure you've never written one bad loan before, Alan. You've never seen a single business go under from being overextended, right? And so I try to encourage our clients, like, hey, this is a resource that you can take advantage of. There's a reason why the bank is approaching it from the way that they're approaching it.
That's right.
Hopefully, if you have a good banker, it's creating a win-win situation, right? The bank wants to get paid at the end of the day. The business owner wants to be able to grow their business. And if we can both do that in a healthy, sustainable way, that creates a win-win for everyone. But if there's some skepticism, if they're approaching it, from a different lens, it means that they're just looking at it through the lens of maybe seeing some risks that you just haven't seen before because you haven't been doing this as long
Yeah.
as they.
Yeah, yeah, those are all really great points, Zach, and you're spot on. I just, I think through as well with when you say that, many clients unfortunately don't really understand, and sometimes when a bank responds, to a credit request, perhaps they're looking to grow too quickly, and a banker may not find themselves comfortable sharing with that, or perhaps the client receives a simple notice in the mail saying that they've been declined. There's no why behind it, right? And so I
Mhm.
think it's important for us to take the time to certainly share that with a client and
Sure.
make sure that they understand why. And then I guess the other part of that too that I would also want to share is have a way of next steps. So maybe
Mhm.
not today, but in 6 months or 9 months, the answer could very well be a yes. And this is how you get there. Right.
Yep.
And it's sort of giving some of that direction. But again, to your point, serving as a coach versus just saying no and this is not going to work out and sending them down the road. And then hopefully, you can find another bank that can do it. That's not really the way that
Sure.
we operate. Yeah.
And I know the last, I guess, most common situation that I've seen is um, small business owners that we work with don't always think about their lender as a part of their team.
Yes.
And I can think of one specific example of somebody that I know who acquired a business that had never operated a business before.
Yeah.
And they had not taken the time to build a relationship, and they were treating their bankers more transactionally instead of
Yes.
relationally.
Yep.
And they finally got to a certain inflection point in the deal, and then it was time to get serious with the financing. And
Yep.
what they thought was just going to be a slam dunk, everything was in place. All of a sudden, they kind of got kicked to the corner, and
Yep.
now they've signed some documents and they've put some
Oh,
earnest money down, and it's like everything is locked and loaded, in terms of the internal agreement, but now you're trying to get the financing in place. And I think the guy ended up having to talk to something like 20 different banks before he
oh
finally
yeah.
found somebody to be
Yep.
able to sign off on the deal, and I
Yep.
just, we had some conversations, and I was able to kind of help introduce it, this person to a couple of other people in my network. But we try to coach our clients through, like, hey, let's not wait until we're ready to break ground or to buy that business or to hire. Like, let's start 12 or 24 or
Yeah.
36 months ahead of time, build a relationship with the bank, set the expectation of what our plan is, cast the vision for where the organization is growing. So by the time we, come to Mr. Allen's door and we're knocking on the door and saying, hey, Alan, we're ready to put an application, you're fully aware of what our intention is. You've had the opportunity to look at our financials. We have a personal relationship. I think it just makes it easier from your standpoint to really go to bat with somebody that you have a relationship with and you understand what they're trying to build and what they're trying to accomplish, rather
Yes.
than just showing up at 11:59 and hey, I need this thing like yesterday, and we've already worked with the attorney, we have all the agreements in place, and now we need the fund. It's like, I guess maybe, you can pull that off, but it just seems a lot more stressful than taking the
Sure.
time to try and build a relationship with somebody along the way.
Yeah. Yeah, we definitely want to take the transaction off the table, right? Yes, it's a transaction at the end of the day, but to your point, we absolutely want to get involved with the client up front as quickly as possible and have that long-term relationship with them to help to understand the business and how they look at it, and more importantly, how they're planning to grow. I whenever we onboard someone or we onboard a client and we talk to them about, who we are and how we do business, I think it's critically important. One of the things that we'll ask for, even though we're not going through the process of doing a loan with them, we'll ask for financials. And the reason for that is to help understand where they currently are and then ultimately where they want to take it to. So that's the part of, again, helping, trying to be a part of that advisory role, providing that expert guidance, taking that sort of holistic approach, very similar to what you guys do with Growth Horizons, is just absolutely critical to understand a client up front and have continue those conversations, whether it be monthly or quarterly, whatever the client's comfortable with. But I think it's we just have to be on the same page. And if you're if it gets to the point where a client chooses to wait till the witching hour, to your point, unfortunately, they find
I'm sure
themselves.
you've never gotten a text message on Christmas or Thanksgiving, like, hey, where are we at in getting this loan funded, right?
Yeah, yeah, it's happened. Unfortunately, it has happened. My favorite is, hey, can I submit an application because I really have to get this done by
Oh
on the
gosh.
15th, and it's the 7th, right?
Yeah,
So it doesn't work that way.
true.
There's some great tools that you might be able to do that online, and
Yeah,
there's some clients that might take advantage of that. But again, those rates aren't as attractive.
sure.
The terms are not as attractive. You certainly are putting yourself in a position where you're kind of at the mercy of paying additional fees and/or whatever,
Yeah.
just simply to get your deal done.
Yeah,
And
everything comes at a trade-off, right? So
you're
if you're
absolutely right.
if you're getting speed right to the transaction, it means more risk on the
That's
institution. It
correct.
means you're paying for it somewhere. You may
That's right.
not see where you're paying for it today, but you probably will 6 months or 12 months or 18 months down the road.
Yes. Yes. You're spot on.
Why
Yeah, it
don't we
comes with the price tag.
why don't we switch gears a little bit and talk about how we've seen businesses use leverage or loans in a really healthy way. So, can you think of any examples where you've been working with an organization that you feel had taken the time to put together really strong financials, and they showed up and they had everything ready? And I can think of some examples, but like the the archetype of the person who shows up, it's like they have their neat little portfolio that's like Oh, I know that you're going to be asking for this. Like, here you go. I'm already ready to drop this off. Can you think of any examples where you've seen people like be very diligent, as they're approaching the lending conversation, and how has that set them up for success in navigating those conversations?
Yeah, it's interesting. I had a most recent client come to me, and even as a banker, and doing this for many many years, most of the time on the banking side, we'll tell you, hey, if a client comes to you and say they are in the restaurant business, more times than not, they're going to want to open another restaurant or another location. And I most recently had a client come to me and say, hey, I want to get in the plumbing business.
Mhm.
I thought, what's going on here? How can you go from business to but this individual had been in the restaurant business for many, many years. And he decided that he wanted to get into the plumbing business and become just fairly agnostic. Running a business is running a business so long as you do it the right way. And I was not just blown away by what he was wanting to do, but I think more importantly by the way that he was prepared. And
Mhm.
he had some good people around him. He had a good, strong CPA, he had a great attorney. He understood the franchise model, so he was dipping his toes into franchise around the plumbing business, and then he had, of course, some good savings in that he could have some equity to inject in this new business. And I got to tell you, it was probably one of the easiest, most streamlined SBA type loans that I've ever been a part of, and it
Yeah.
was all because of him being prepared. Right,
Mhm.
despite the fact that we in initial stages found that there would be a hurdle because he was going into a completely different industry and probably had no history of being a plumber.
Mhm.
But he went through the process of understanding it, of being licensed, going through the process of getting licensed into that particular field, going through some trainings early on, and
Mhm.
had a business plan and really checked the boxes, and had his financials in place, and that made a huge difference for us, and it made a huge difference for him. And so, or you traditionally may hear um, something on the street about SBA takes a long, long time, or they're very document intensive. Some of that it may hold true, but I will share with you that if you're prepared and you're ready and you've got all your ducks in a row, it makes all the difference in the world. And we were able to, kind of help guide this thing along and within 60 days. And that was just a testament of not just us in the process, but I, quite frankly, about the client, how they were prepared, very
Yeah.
well prepared.
Mhm.
And so that just, it's night and day.
Yeah, so we talked about some of the pitfalls of maybe overextending yourself, thinking about taking on too much too fast. Can you think of any examples of, business owners, organizations that you've seen take on the debt in a really healthy way and use it to really help them level up and grow into, some of those expectations in terms of where they want to be as an organization?
Yeah, I think, healthy debt's always good, right? Some of the best clients will come to me and never take on any debt, right?
Hmm.
They can pretty much self-fund themselves into anything. But I will share with you that some of those clients know how to leverage debt appropriately. And whether that be to take trade discounts, whether it is appropriately using a line of credit because it's a
Hmm.
short-term item or vehicle to use. But they come to me, even I've had clients that'll come to me and have perhaps a nice line of credit, and they are looking to purchase some inventory or perhaps some equipment. And instead of just the initial punch of saying, well, I'm just going to go put it on my line of credit and I'll talk to Alan later, they'll pause, right? Take a deep breath and come to me and say, hey, this is what I'm looking at doing. I just need an extra day or two to kind of think it through. What would you suggest? Right. And that conversation will come more of a term loan, perhaps, or either another options where sometimes clients forget that you can do even things on the personal side, right? And so I've had clients that perhaps it makes better sense from just a term and or maybe a cost perspective to consider doing a home equity line, right?
Hmm.
Or home equity loan and use it for their business. They can do that, and you can do that in Texas.
Yeah.
And some clients have really benefited from that versus going down this path of business lines or business loans, which are critically important for certain purposes. But if there's a place for us to leverage other pieces of that puzzle, we will absolutely do that. And
Yeah.
so it's about having that conversation, helping them understand what's
Hmm.
best use.
Yeah, it's good. Have there
Yeah.
been, any examples, clients that you've worked with along the way that you feel really invested in the relationship, and how have you seen that make a difference whenever it comes time for them to have that lending based conversation.
Yeah, invested in relationship. What we mean by that is really being open to having those conversations in those meetings. I think you mentioned a little earlier, having these conversations on a quarterly basis, staying in front of one another, and it may just be good to catch up about personally kind of what's going on in their world, but I think more importantly what's happening in their business and
Mm-hmm.
what their strategy is going forward and kind of what they look forward into the year, how the economy is currently affecting their business. The big thing right now is tariffs and all the things that are happening, and some of those businesses, even small businesses, are being affected greatly by that.
Sure.
And so having those conversations and understanding where they sit and how they're being impacted has a great deal to do with how we may be able to perceive them as well as a business and how we can help them,
Yeah,
and what sort of vehicles we need to set up for them and their success going down the road, so that we make sure that they're going to be here in the next 2, 3, 5 years.
sure.
um, so good stuff there.
Yeah, and I don't want to give you PTSD, but I remember whenever COVID was happening, and I was working with a lot of commercial lenders, back at that time, and the way that the bankers were being inundated with these PPP loans, right?
Oh,
And I remember them having a lot of conversations and just being really frank and saying like, "Hey, sorry, Joe Bob, like we don't have a relationship with you. Like you were the one that wanted to build a relationship with an online bank, and now that you're trying to keep your business open, like this is the back end of what happens whenever." You work with an organization that doesn't prioritize the relationship, like
sure.
take a ticket and get in the back of the line. And I
Right.
remember a lot of those lenders being able to really prioritize a lot of mom and pop, small business, family owned organizations that had been with the bank for some of them 10, 20, 30 years and say like, hey, we're going to help you get through this. And I remember the bankers, like some of those guys were putting in 20-hour days to get those applications done and like sleeping up at the office to make
That's
sure that
right.
everybody was taken care of during the deadline. And so we just try to remind some of the clients that we work with, like, maybe you can work with an online bank or a larger organization and they're going to be a little bit quicker. Maybe they're going to offer some bells and whistles, some features, but I don't know. I'm just of the opinion that working with a community focused bank in the long term has a lot more benefits because at some point something's going to go wrong,
Sure.
right? In the economy as a whole, in your business. I'm the type of person that I want to be able to pick up the phone and I want to call Alan on his cell phone and say, "Hey, Alan, like you've been along for the ride for the past 10 years. We're hitting some speed bumps, man. We need some help." I
Yeah.
don't want to be the person that has to pick up the phone and call a 1-800 number and get in the queue and have to wait for, 2 hours before I talk to some random, stranger. So
Yeah.
that's where I've seen the relationship really being prioritized whenever things are not going the way that anybody was expecting and seeing the community banks really step up and be able
Yeah.
to help clients get through and navigate a really difficult season.
Yeah. Yeah, and to piggyback on that a little bit more, we do find a place where many clients, to your point, go down the online type bank, and that's fine, or maybe perhaps a smaller bank, that sort of thing. And I think at the point where you get what you pay for, right, just like anything else. And so, sure, the online banks are great and wonderful, and they've got some, to your, you said earlier, bells and whistles and whatever else. Maybe a little bit, they don't have service fees, whatever the case might be. But when it gets down to it, you get to the point where you find yourself that you need to take that extra step in your business and need to grow that business or really scale it. It gets real tough to do that
Yeah.
when you don't have somebody to really talk to.
Mm-hmm.
And we spend a lot of time making sure that we stay in front of clients as much as we possibly can. And one of the big things that was said to me when I first came on board here was that we're in the people business. And frankly, we just happen to be in a bank, and that truly is meant to the core, and
Yeah.
meaning that we are here for people to really kind of understand where they are and drive that relationship as much as we possibly can, and then kind of see where that can take them from a banking standpoint, if there's a place for us to help them. And quite frankly, if there's a place where here at Frost we're not able to help them and it's just not the right fit right now, that's
Sure.
okay.
Yeah.
We're able to help guide them perhaps down the road in another direction. But
Mm-hmm.
that's a lot better than just saying no or sending them some email saying that they've been declined, unfortunately, and they moved
Sure.
down the road.
Yeah. It's good. So as we kind of transition, we always like to carve out some time and give you, some strategies that you can actually go in and implement today. We don't want this to just be conceptual. I think it is helpful for us to talk about some of our experiences that we both have, but a couple things that I'm walking away from our conversation today. Uh, Anybody who knows me and has ever engaged with me professionally will always hear me like just beat the drum of get your financials in order. Like it is one of the best investments that you can make in your organization. If you're not a data driven organization, if you don't have information, like if you've never watched Shark Tank, just go turn on one episode, and I can almost guarantee you the very first question that they're going to ask them are, "What are your numbers?" And
Yeah.
anytime you get in the room with somebody who's not a principal or an employee in your organization, and you're trying to get something from them or you're trying to partner with them, one of the first things they're going to ask you is, "Hey, let's talk about your numbers. Where are you at from an organizational health standpoint?" So step number one, like just making sure that you're prioritizing getting your financials ready. If you don't have a good team in place, making sure that you are working with a quality bookkeeper or accounting firm to make sure that you're staying on top of those financials. Secondly, a big takeaway that I'm walking away from our conversation today is prioritize building a relationship with the financial institution, with your lender, with whoever that person is that you're looking to get a capital infusion for. Those are two big things that I think hopefully are very helpful for some of the people that are listening. Alan, is there anything that's really stuck out to you from our conversation today?
Yeah, and I think those are really great key points. Again, just scaling back to making sure that you find the right loan, right?
Mm-hmm.
Making sure that you match that up and it's purposeful and that you understand, how those fit into your business. There's a lot of great tools and solutions that a bank can provide, whether it be, lines of credit or SBA loans or personal loans, lines of credit, equipment financing, all the good things. I think
Mm-hmm.
at the end of the day, it's really understanding how to specifically leverage and use those tools and pull those levers when you actually need to. Line of credit's not the answer for everybody. In specific times it may be, and then in other times it may be better suited to get specific equipment loan for that specific piece of equipment, or perhaps a vehicle of some kind.
Sure.
One of the big questions I always get is, I've got these vehicles and I don't know if I should do them personally or I should do them
Mm-hmm.
business. Well, those are
Yeah.
two-way different things, and so we want to understand those things.
Yeah. Yeah. It's really good. The last thing that I forgot to mention was just thinking about debt as a growth tool in the same way that you would think about it as hiring a person. I know that we talked a little bit about on one end of the spectrum, there's an unhealthy way to use it, which is overextending yourself.
Yep.
The other end of the spectrum, which I see a lot of small business, family owned, mom and pop shops, is like at some point they had a bad experience or they heard a bad story about somebody who got in trouble with utilizing debt. And
Yeah.
I try to encourage clients in the same way that you probably wouldn't pay cash for your house when you're buying your first house. Like, I don't know, maybe some people are like really fortunate, and are able to go buy like a starter home for Central Texas for 300 grand. Most people probably can't. Like having a mortgage is good, healthy debt. It's structured
Right.
appropriately. It allows you to have the accommodations of a beautiful home, and it's a good starting point that allows you to kind of step into the next stage of your life. I think the same thing is true when you're thinking about leveling up your organization, when you're thinking about taking on that next big project, or you're thinking about adding some additional people inside of your organization. Like there's a healthy way to think about utilizing debt to hopefully allow you to expedite the speed at which you're moving.
That's right. Yeah, that's a really great point. And a lot of folks will also, you want to make sure that you understand that you're utilizing and again leveraging that debt in an appropriate way. It is unfortunate that there are clients, unfortunately, that spend the time to go down this place where they take on an enormous amount of debt and then can't find their way out of it, right? And so we want to make sure that it's the right thing at the right time and it's purposeful. And again, it's something that'll help the business going down the road.
Yeah, that's great. Well, as we
Yeah.
kind of wrap up and transition over to the our final segment, which is just kind of closing us up, Alan, from our conversation today, any I guess final takeaways, anything else that's kind of standing out in your mind that you think would be helpful for anybody who's listening today?
Yeah, again, just to, and I appreciate the time. A couple of key takeaways that I'd like to mention is that, just to understand that usually banks don't just look at your credit score, right? They look at a number of other factors. They look at not just the financial health of the business, but also of you personally and where that may lie. And then, of course, what the purpose or the intent of that loan is. And then to always understand that a no is not a hard no. It may be one that it's a no, as I call it, a soft no, that we just can't do it right now, right?
Yeah,
Perhaps it may be something that we look at in the 6 to 9 months down the road, and this is how you get there. It's good to have a good relationship with your banker, that they will actually be able to explain that and then walk you through that process and help guide you through that process and give you some good coaching or some good tips to do that. What you don't want is, unfortunately, just a hard no or somebody to give you a no and then with no direction. That doesn't really help anybody.
yeah, that's good.
And then just make sure that you use debt appropriately, right?
Mhm.
You don't want to create a lot of stress on yourself and or the business. So we certainly don't want to over leverage a company. And we fully believe that here at Frost, whenever we look at a deal, we want to make sure that we explain to clients what cash flow means, what healthy cash flow means, and not to over leverage anybody or put somebody in a pressure situation where it just doesn't make sense.
Yeah. It's good. Well, Alan, if we have anybody that's listening today that maybe has some follow-up questions, what's the best way for them to get in touch with you?
Yeah. So the best way to get a hold of me is always my cell phone. It's probably, I give it out like candy, right? And I sincerely mean it. Always feel free to call or text me. I'm
Mhm.
always available. I don't know if I could share that with you today, but that number is 512-500-9833.
Mhm.
Of course, you can always email me as well. My email address is alan.alanis@frostbank.com, and that's ALAN.ALANIS all one word.com.
Awesome. And you also work at the Georgetown location. So for anybody who maybe that was a little bit too fast, just feel free to go on Google, type in Frostbank Georgetown. Alan and his team would be happy to connect with you.
Absolutely.
Well, Alan, thanks so much for being a part of our conversation. Just a reminder, next month we're going to be having a conversation with Reed Rutherford, who has run a number of different organizations. He's been involved in venture capital for over 40 years. He has a Silicon Valley background, so we're super excited to be talking about kind of the flip side of this coin, which is maybe bank financing doesn't make sense for where you're at as an organization. And you're thinking about taking on some sort of capital infusion from an outside organization, some private investors, and how do you navigate some of those conversations. So we appreciate everybody being a part of the conversation today. Thanks so much, Alan, for your time today.
You're very welcome. Thank you for having me. It's been a pleasure.
Thanks.
All right. Thank you.